Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Friday, April 18th. And you know, it's always very nice to have your vision manifested, and that's what happened to me today. It's part of the thrill of the game. But you know, the game goes on, and there's always a next call. So we're working on that, and we'll take a look at that in our final segment. But first, for those of you who don't know who Mel Fisher was, who I mentioned on my site today, Mel Fisher was the man who found the Atrocia, which was a sunken Spanish ship loaded with gold and silver. And he searched for it for years and years and years. And every day he woke up, he would say to his son and his crew, "Today's the day." And eventually, one day it was. So that's who Mel Fisher was. Anyway, let's get back to the market. I've got a new idea for you for Monday morning, and then we'll take a look at the one stock that we bought today, our Micron Technology, and then we'll take a look at the major averages, and we're going to see what's next, because you know, you're only as good as your last trade in this business, and we always got to keep moving forward. So stay tuned for that, and we'll take a look at things. But first, to our new idea. Our new idea for Monday morning is SPF. Now, in just a moment, we'll take a look at its chart, and I'll show you exactly how we're going to take this idea and turn it into some money. Now, don't go away. I'm going to do my disappearing act. I'll be right back. Okay, we're looking at a daily bar chart of SPF. The name of the company is Standard Pacific Corporation. Stock traded 2,500,000 shares today, so it's pretty liquid, and it's a great looking chart. What do I see? Well, I'd like to buy this stock right around where it closed at somewhere between 550, 560 and 540 is the ideal spot. The problem is I can never get these stocks to you exactly when the stock is at its sweet spot, but I'm going to get it to you when it's pretty close. Now, let me zoom in just a little bit here to give you where the sweet spot is. The sweet spot is right here. Well, we might have missed it, but we're still close because the upside potential in this is pretty good. So I'm going to leave it up to you to decide where you want to buy this. It could come down into this 530, 540 range again, or you may have to pay up a little bit. If you chase it, well, you know, you may have to live with it pulling back 15 cents against you, but eventually it's going higher, so you're the one who has to decide. Now let me take you through this. This I call, my initial target is $9 up here. That's our initial target, and it's only a benchmark. These are just areas that we think that would stop it, depending on how it moved. If it ran up there in a week and a half, absolutely it would come back down again. If it ran even up into here, up to 8.5, quickly, it'll come back down again. It all depends on how it moves. So if it runs fast, I sell, and then I wait for it to dribble back down into support. If it slowly staircases itself up, I'll hang on to it. That's pretty much how it works in trading. Now let me take you through this in the beginning. This is the bottom. This is the initial breakout because it broke out above its last high. See it? Then this last high becomes support. You can follow it all the way across. I'll draw a line. I run out of time doing this, but see, these are just areas. Okay, that's pretty much it right there. Breaks out, it pulls back, tries its old high again, doesn't make it, tests support, holds, tries again, pulls back, and then bang, right through. So after it gets through, now this is our support area. So this is what I call breakout, pull back, go. And I've been bringing a couple of these to you because it's a great pattern. It works a lot once you get an up stock, and that's what we think we've got here. We've got an up stock. So this is where you ideal spot to buy it if you can get it, but I'm going to leave that up to you. So let me recap that. That's SPF. We're looking to buy this on Monday somewhere around, the ideal spot is around 540, but the rest I'm going to leave up to you. Now I want to take this and I want to turn this into a 9-day chart. I want to show you the potential of this company. Let me clean it up. First thing I want to point out is it's down from 50. It's 3 years ago, but still that's where it traded at one time. But what's really important is this rounded bottom we've got here, and the potential of how high this eventually could slowly work its way back up. This is a great reverse head and shoulders, ascending triangle. It's got a lot going for it down here. Zoom a little bit in. See it? So I have our first target somewhere like in around here. In around here to stop it on the first move. But anytime it pulls back into this area again, then you got to buy it. So we could have a number of trades in this over the next 6 or 8 or 9 months. Okay, but that's our initial one. Is our initial trade is to buy it around 540, and we'll be looking to sell it around 9. All right, let's take a look at the one we bought today. Micron Technology closed right on the high, almost on the high of the day. Traded 27 million shares, which is above its normal daily volume. And once again, the key spot is 705. If it pulls back here, there's nothing wrong with the stock. It's a gift. Just get out the checkbook and buy some more stock. Now, if this were to shoot up real fast, like in 2 or 3 days, up into this area here, I'm probably going to sell it because I know it'll come back down. If it goes up slowly in an orderly fashion, I won't be selling it. So it all depends on how fast it moves and how it starts to move. That's why these targets are difficult. They're difficult to comprehend sometimes. It's not really so much about the target. It's how the stock is moving at the time that's important. So keep that in mind. Okay, that was our new idea, SPF, and our old idea, Micron. Now let's take a look at the averages, because there's always the next move, and we've got to be ready for it. We've got to kind of figure out what's going to happen next. Okay, here's my favorite Dow picture. Come on, there it is. There's the breakout. It looked like magic, didn't it? Boom. It would be nice if you could just draw them in yourself. It doesn't work that way. Okay, we'll go through it again. Reverse head and shoulders. It's an important pattern. I want you to see this, even though it's a little ragged here and there. If you have vision, you can see it. And a lot of people send emails into me telling me, "Oh, it's too sloppy. It's not what you think it is." And anyway, it worked out. Okay, where's the next support? It's down in here, or it's right in here. The important thing to remember is that any pullback is going to be shallow and short-lived, because now the trend is up, not down. So you want to be looking to buy, and I don't believe the sell-offs are going to last more than a day or two. So that's our strategy now, okay? And I hope everybody was able to gather up some educational points while we went through this. Those of you who watch me every day, we lived through all of this. We thought it was forming a right shoulder. That was our guess, and sure enough, that's what it turned out to be. Okay, let's take a look at the transportation average. Made a new high, didn't explode like the Dow, but you have to remember these were way ahead of the Dow. These are a leading index. Our support is right down in here, or even a little bit lower, and they could come back down. They always come back down to support again. So that's the transports, the QQQQs. You know, we thought, breakout, pullback, breakout, pullback, and I said the other day, it doesn't take a genius to figure out what's going to happen next, and we got our breakout above the all high. We got support right in here now, and they could push a little bit higher, but eventually someday they're going to come back down again. I don't know exactly what day it's going to be. Okay, let's take a look at Google, because I want to point out something to you. This is my 20% guideline. If you read my trading philosophy, you'll see where I say anytime a stock moves 20 to 25%, the risk-reward ratios change, and it's probably a good idea to sell it if you're a trader. Okay, and now this stock closed up just about 20%. Now, you wouldn't find me buying this stock up here. It's just too overdone. I mean, I would have to have this go back and forth for 6 or 7 days and then break out to the upside before I say, it's a continuation pattern. I think it has a better chance of coming back down, testing the support area here. So this will be interesting to watch. It totally broke out, and the major trend has changed. But the short-term trend, you might want to wait to buy this until it gets back down in this area again. Anyway, it'll be interesting. That's my 20% rule, so let's see how this works out. Let's see if my philosophy is right. Okay, so I think I covered everything, and until tomorrow or Monday, that's my view of the market. This is TK signing off.